बुल मार्केट अभी भी बरकरार है और लंबी अवधि तक आउट परफॉर्मेंस जारी रहेगा। दिग्गज निवेशक रमेश दमानी ने हमसे खास बातचीत में भरोसा जताया। उन्होंने कहा कि बाजार में तेजी से कंसोलिडेशन जारी है। इसके अलावा उन्होंने फिनटेक, कंज्यूमर टेक कंपनियों समेत निवेश को लेकर भी सलाह दी।
I believe so, and I'm positioned for it to do that way. But I think you need to understand the intellectual reasons why there's a band of people who seem so bullish on India, and I include myself one of them. Despite all the current imbroglio that's going on with other parts of corporate India or the sluggishness of the economy, the poor earnings season that we went through, is every bull market has a reason, as you know. Let's say the 92 bull market, it visualized liberalization was going to take place in India. Say the 2000 bull market, it visualized India was becoming a technology superpower. So what is the intellectual reason why this market has been headed higher? Why has it doubled since the post-COVID lows? I think there are two reasons. One is demographic and one is the geographic position. Let me take both of them and explain to you. Let's see about the demographic reasons India is going up. Over the next 20, 30, 40 years, China is going to lose 250 million of its population, and India is going to add 250 million population. So India's population is still rising while China is declining. Now, what is the forecast for GDP growth? You need population growth, plus you need productivity growth. So India is in a good position to do that, if you will. The last few years is particularly some of the defense and railway PSUs. And given the government's capex push in railways particularly, I think there's some very cheap stocks, I'll use that word advisedly, cheap stocks in the railway space. And if you notice the last few days, there's been a lot of noise of India becoming an export powerhouse in the defense sector. Now, if India is going to be an export powerhouse on defense, $5 billion is the number bandied around next year. I think a couple of listed companies which will have to benefit dramatically from that push. So I would say you go for data, and then I would still stick to some of the cheaper defense and rail PSUs, particularly because of the capex and export push that they're experiencing. All the fintechs and the consumer tech companies report a very strong sales growth, but still profit is eluding them. How good is the sales growth? I mean, if you look at the quarterly numbers at least and divide it by about, I would say 90%, about 600 million people are their addressable market. The per capita consumption of a food delivery company per quarter or the per capita consumption insurance company is like 10 or 20 rupees per quarter. So it's very, very low. And I think given the fact that India is going to add 250 million people in the next 30 years, 95% of those people will have access to a smartphone and will have access to cheap data. And they've been born post-92, so they're post-liberalization children. And they only know the technology and internet. They're not used to long lines, ration queues, and things like that. So they will be eager beavers, in a manner of speaking, to enter into the fintech and consumer tech space, if you will. Me, who's more interested in capital allocation, more interested in finding stocks, we try and find stocks that are gleam in the eyes, small caps that can become mid caps, or perhaps even large caps over the next 10, 20 years or so. Unfortunately, the SEBI regulations, I can't discuss names with you. But I would suffice you to say that I have been doing it, and I'm finding things that I want to hold for 10, 20 years. And hopefully they'll be right, and they will be a mother lode of value for my grandchildren at the end of the rainbow. Compounding is how your money becomes wealth. And, there used to be an old gentleman in the last street who, you must remember, I'm an MBA. And despite that, I learned the compounding lessons from an old friend of mine called Chandrakant Sampath, who unfortunately passed away a few years back. And he used to sit down and explain to me the power of compounding. And he'd say that if you get your money double every 3 years, no matter what amount you start with, at the end of a 30-year period, which is your professional career, you'll have 10 doubles. And at the end of the day, you'll be a very rich man if you do that successfully over a period of 30 years. And you must recall that for a lot of us, between 95 and say 2005, 10, 15 years, the very low capital gains tax in India, very low tax on dividend. So we compound at those rates for long periods of time and add substantially to our wealth. So we were very lucky in terms of that generation. But the point is that you can start with 5 lakhs, 10 lakhs, it doesn't really matter. The important thing is to first invest in appreciating assets and not depreciating assets. Because appreciating assets, you could get wrong. Maybe it won't work, but maybe it'll compound for you. Depreciating assets like buying a very expensive car or taking a very expensive vacation or buying a very expensive clothes will almost certainly go to zero over the next 3 to 5 years. So the first rule of law is that you buy and invest in appreciating assets. The second rule of law is that you hold it for a long period of time. Compounding gives you magical returns.